We've started a brand new segment on home loans because if you're buying a property, you must take a home loan. Even if you've got money in the bank, it makes much more sense to park that money in high-yielding investments and actually leverage for your home, get your tax breaks. Today joining me is Vamsi Kumar, Group Business Head, Reliance Commercial Finance. Vamsi, thanks very much for joining me. Let's kickstart the show with our first question. Samar Rahman writes in and says, I want to buy a ready-to-move-in house in Lucknow. Please suggest if I can get a pre-approved home loan of 35 lakh rupees. What does he need to get a pre-approved home loan?
See, Manisha, there are two variables which are not part of the call. One is the age of the gentleman who's raised the question, and secondly the years of service. Okay. Assuming that he has about 20 years of service left, he can easily qualify for a 35 lakh loan. That's not a big problem. So having said that, considering the fact that he's in Lucknow, he should get in touch with his financier and then start looking out for his property and parallelly initiate the loan approval exercise. So working in a company like Eon Hewitt and drawing an 80 lakhs, I don't think he would have tough time in getting a loan.
All right, let's take this next question. Mr. Suhas Reddy is on the phone line with us. Mr. Reddy, hi, go ahead. What is it that you'd like us to help you with?
Well, I wanted to ask that given on the current market scenario and inflation thing, what will be good for me? Should I go for a home loan on fixed or floating rate interest?
Okay. I think this is a really, really relevant question today, Vamsi, because, here we were hoping that Reserve Bank of India would probably look at further rate cuts. And now we have a situation where retail inflation has come back and is biting everybody at its heel. So clearly, I mean, with RBI governor saying that he's not going to soften rates if inflation will continue to rage high, does it make sense to lock in at the current rates, which is just sub 10% across most lenders?
Yeah, it's a pretty interesting question, and I think given the current times that we see and the recent trends of a declining interest rate scenario, I think what we notice today is that the interest rates have softened a lot, and in the next 2 to 3 years, I think this current trends are going to sustain. Having said that, a home loan, which is a long tenure product, which is about 15 to 20 years of a product, it makes a lot of sense in the current scenario to go for a floating rate product, because at least in the next 2 to 3 years, it helps you in terms of taking advantage of the softened interest rates, and we hopefully we do not see a rise in the interest rate. At least they would remain at the same level as they are currently for the next 2 to 3 years, and then it helps you in a better planning as far as the planning out your financial burden is concerned. It helps you in the long term in terms of managing the cost of the loan itself. So it really makes a lot of sense for you to go for a floating rate loan at this stage.
Also, Vamsi, I feel that there are very, very few people who probably, in 2006, I would say, or 5-6, took a fixed loan at 7.5 or even 6.85 and benefited from that. In most cases, I've found that you're never happy. If you take a fixed loan and then if rates fall, then you feel miserable. They may go up, you may feel a little happy for some time, but if you just, for your emotional satisfaction, I think it's better to stay with the current interest rate, isn't it?
Exactly. I mean, things are pretty unpredictable at this stage, and you really do not know which way things would go in. And therefore, whatever you have currently at the current situation, it is always better to go for a floating rate and then take the advantage. In the next 15 to 20 years, you would always have these kind of fluctuations in the interest rates happening, and you never can predict the future. Given this scenario, it's always better to lock yourself in a floating rate scenario, and that gives you the flexibility to plan your, to plan for a better financial burden. Soften the financial burden.
Fair enough. Final question, Mansher Gill. I have a home loan with State Bank of Patiala. Outstanding is 75 lakh rupees. My EMI is 1 lakh. Wanted to know if I will benefit if I opt for a home loan saver. Please tell me the pros and cons of the scheme. First of all, I'm left wondering, why is he paying such a high EMI? I mean, his EMI should be much lesser, isn't it, on a 75 lakh loan? What do you think, Vamsi?
kind of tenure that he has gone for. Okay.
So it could depend on the tenure.
The shorter the tenure, the shorter the tenure, the higher the EMI, and it's always better. I mean, honestly speaking, India being Indians, we are debt averse. So probably the gentleman would have actually gone for a lower tenure, considering the fact that he has high cash balances. Now, as far as the home saver scheme is concerned, the program is this particular program. It's a prudent financial tool if you know how to go about planning your entire financial burden. In the sense that you have the bank which links a current account to the home loans account that the gentleman carries, and whatever is the excess money that he has, the cash that he has, he parks it in this current account, and the interest is charged after factoring in the savings balances account, and on the net of the on the home loan is where he gets the interest charged. Now, what in this happens is that you always have excess funds, and it gives the flexibility to the customer in terms of planning a fast, expediting his repayment, both in terms of the principal as well as the interest, and it also helps in managing his interest cost pretty well. And the higher the cash balances, the more the merrier.
Right.
That's how it works.
So in simply put, what I understand is if you are one of those people who has a lot of float in your bank account, then it's better to take a home saver account, because sometimes generally by the time you take that entire amount and decide which investment you are going to park it in, if it's swelling up to anyway 4-5 lakhs in 2-3 months or 6-7 lakhs, you actually earn reasonable interest, isn't it? And your burden on home loan EMI comes down.
True. See, the way it works is that your interest is charged on the net of the savings balance, on the balance outstanding that you have on the loan side. So to that effect, your savings is actually working in favor of repaying the loan itself. So indirectly, it is actually helping the gentleman in terms of managing his overall cost of the loan, and that's how it really works, and it helps. And also the fact that the funds that are parked at any point of time can be used for prepaying his principal itself. So the principal itself gets faster paid off.
Faster payment. So it really works for a lot of salaried employees whose salaries keep coming, and they take some time to actually park it in investments, so that surplus goes to both bringing down your interest and your repaying your principal faster. Vamsi Kumar, thank you very much for joining me. We got really interesting, questions, but we picked out 3 best ones, which give you a lot of information on home loans and what else can you look for. So write into us if you've got a home loan related question, and we'll get back the experts to answer them.